Okay, quick Tuesday morning radar update. I'll apologise for my cold up front before I start coughing. So, we're following the US today. Let's just jump into those daily markets. First things first, I think I'll just bring up the dashboard. You know, we got a pretty high reading on the pullback zone. So I posted it on Twitter, I think Friday or Saturday. So, go and have a look at that if you're interested. On the closing highs, we were in the crickets area, so it's a very normal area for us. Very normal area for us to sort of talk about. This is where reward to risk is found. Same with Bitcoin. It's the same story on that. We talk about where reward to risk is found before it gets there. We know where reward to risk exists on the chart, and for my time frame, it's mean trend. So, the transport's obviously the leader. Big, massive punch higher. Where do we look for reward to risk, and where do we look for the buyers to step in, at least have a go? It doesn't mean it will go through straight back through highs again. It never does. But over and over and over again, this is the area we get involved with. And distribution, a little bit of a inside day, distribution, and then a wide range day, accumulation, and then bang, we get a follow through day there. So interesting. Yes, market could flip flop. It could be back on the lows. We don't have a crystal ball. All we do is we respect where reward to risk is found. Here, rolls over, comes deeper. Do you remember transport's correcting while the other markets kind of, the markets have been taking the turn to correct and digest, and obviously the Russell as well. I know I bang on about this, but it's always the story. The Russell's leading us lower. The weakest markets are always going to be the weakest markets. If you're a long biased with the actual market trend, which is stacked long, you don't fight the trend. We're long in pullback zones, and the weakest market is the Russell out of the markets what really affect us. So we don't, we respect the trend, and we don't look at the weakest market, and we know which the strongest markets are. So let's just go through these one by one. Dow Jones comes into like the 200 day, bit of a messy range on this one, but we're 50% back into the range, aren't we? S&P, chart masterpiece is what it is. Nasdaq, come on, the doom and gloom out there is, even if it fails, I'll just tell you this now, when you should be paying attention, you're probably, the popular feeds are doom and gloom when you should be paying attention, and sticking the heads in the sand, just puking out negativity. When that's happening, that's where you should be paying attention, because that's where the markets tend to try and put the low in when everyone's puking. DAX, just closing a gap so far, but 50% back into the range. FTSE 100, what was it? It's one of the worst markets to follow, but here we go. Base breakout, first retrace. They call this a failed breakout, don't they? But breakouts, sometimes an event, usually a process. There might be a process 3/4 of the time, but the time you decide that it's going to be a process and you'll buy the dip is the time where the best mover breaks out and doesn't look back. So you have to soak up the volatility of a breakout. It's not an on-off instant sort of, you don't get instant gratification out of them, especially if you trade them you know, year in, year out like me, you know, go-to setup, instant gratification is not really what you get out of breakouts. You've got to live with them. All trending stocks will break out. 3/4 will be called failed breakouts, and then you'll look back at them and think, well, why are they going higher? You know, they're drifting higher again. But the breakout level's been traded. That's the way to think about it. Anyway, let's just jump out of there. Yeah, some, you know, the market started to second guess some, didn't it? And a lot of stocks have done this. Small caps, bottom of the food chain, liquid, you know, investors just losing patience, throwing in the towel. That is where the market, you know, bounces, and that's what you got on some there. And yeah, you know, I know they're chasing the news this morning, so, you know, back and fill whatever, you know, above here I will trail. I won't get to add much. So on the other, well, there goes right side of the base. SUP's trying to move out of a little ledge here today. A few others up on mine. On the downside, WATR. Let's just do a little bit of charting on this one. You know, previous resistance hopefully should become support. Extremely interesting area that for me on WATR. I have a position, I'm riding a position. I've got to stop what's just out of the noise, but you know, talking my own book. Very interesting. We'll watch that. We'll see if it hits the, look at this big round number here. We're trading 990 on the ask. So let's see if we see that in the end of day screens over the next day or so. Moving on from there, I think we'll just jump straight into the volume leaders. I'll go large caps first. It is 10:30. We should have traded 29% to be on average volume. That would be 44 to be in conviction. Yeah, it's a on volume day. Sectors. There's too much to go through here, but you're going to be investment trusts are loading the screens today. So there's Bunzl. That was the kind of hard retest there, the first retrace on Bunzl after that breakout. If you only traded breakouts and first retraces, your results would improve no end. And also respect where this, you know, how many breakouts and pullbacks you've missed prior to the one you're looking at, because you know trends only run for so far. So you know, getting the early breakouts and the early pullbacks early in the trend allow you to hang on for outliers in the ones that keep going. Impacts, yeah. You know, I kind of guessed on you know, this pullback being actually maybe a base, but no, off it went again. Fantastic. This one was obviously a work of art as well. At JSC, I have a position. I won't talk my book on that one. It's an oiler, you know, do your own research and all that. Sound like a school teacher today, don't I? But you really got to make sure you own something on your own terms. ATG, obviously, you know, it's expected to you know, post pre-tax profit. This one had a good IPO run there, didn't it? And you know, I was kind of interested in this one. It's gone sideways for quite some time. It wouldn't be a GTRS stock as per my sort of what I look for, but it would be, you know, an interesting one. On the other hand, Kate wasn't it a GTRS stock what I couldn't own because I didn't have any cash to buy it. But fantastic. And high five to those who are riding it, because I know there's quite a few of you in that one. I'll just put 29% in the small caps. This is where we find the interesting ones. It's a big update this morning. Yeah, risk hasn't really flowed into the small caps yet, but there's, we're seeing a few green shoots. Lord just bumbling around here, post IPO run. Not really the best price action, but just ended with but there like an Australian would do. Some obviously, yeah, mind the gap, I'll just do the old open interest, these things gap up. Everyone chases RNSs in the morning, and basically they some of them just some of them do take off, but it's the 20-80 rule. I suppose 80% of them just bumble around, and the bigger players start to build the positions after they agree that they want that on their books. So private investors can pop these things short term. In reality, they tend to drift back, and then the real moves tends to start after the private investors have ran out of puff. That's the best way of explaining it. If you understand that, you can, the job is align yourself with the players what move the market in the stocks what have a reason to move, not to chase and clamber over each other, to get on board. It's not a race to get on board, it's just making sure you're on board at the right, on your own terms. For me, that's a reward to risk kind of scenario. Virtue yet continues. Yes, I'm always a little bit down on the motor dealers, but they can trend, and it turns out that they've trended all right, haven't they? VTU being a leader. This one hit our screens. It was bumping this level. We saw it here first on the swing points. We saw it here on the swing points. I'll tell you now, we saw it here as well in this little ledge, because as soon as it passes the trend filter, it hits our screens. But the first stage base, and then off it went. Another little mini base here. This was like a little mini base. Could have pulled back to it. Right side of a stage base. Actually broke out here. It closed and traded above here for a couple of times, and it did an early pullback again, and then off it went. Little mini base what turned into a pullback. Reverse vol base, the bigger picture of that. What does a reverse vol base mean? Well, it means there's a higher chance over the next 100 reverse vol bases that an early pullback will come into that level. The reasoning is the percent move it has to do to break out, it kind of runs out of puff again, doesn't it? And then it comes back in, and you get the first retrace, previous resistance becomes support, and then off it goes on its journey again. And it's doing fantastically for those who held. Obviously, I wouldn't be looking at it now. I'd be riding it out all day long if I was loaded, but I think it's getting a little bit late to be thinking of initiating 18 positions in those. So that's what I see today. I'll quickly just go and have a quick look at the dollar. We talked about this level in the dollar for some time. On the other side of that, let's just quickly have a look at a few of these. I mean, gold's just in a horrible kind of range. Though a few of the miners are doing okay. Where's the metals and mining? Spine. If I can find it. There it is. Yeah, on the lows. So we will see how that plays out, and we'll quickly just have a look at the reasoning behind me not being bearish on Bitcoin, just talking about Bitcoin coming into a pullback area, was because it's the same old, same old. I mean, this thing start listed, and once you get one of these in the market, a Bitcoin ETF, they can put the top in a market short term, and there was that, and the case of, we looked at this swing point here, the test of there being a potential sort of swing point, what would give you a nibble into Bitcoin, and it went 100% and broke out. So the reasoning behind us talking about Bitcoin coming into this normal area here, previous resistance, not that it's got defined resistance, it's reward to risk. It doesn't exist after 100% to break it out. It took 100% to break Bitcoin out, more off the lows, but 100% plus to break it out. This is normal action. It is what it is. It doesn't mean it's, delayed prices, I will say, I've got here. So, and TLT trying to move out a couple of days ago, and it's just dipped back in. You might get an area of interest here, as we did on the US dollar. So you might get a little bit of, congestion, a little bit of consolidation there, if it is going to break out. Expect it. If it doesn't happen, so be it. But that's what I see in the markets today. Leave it there. Be interesting in the end of day screening tonight, won't it? Okay.